Hey everyone, happy Monday, November 3rd. I'm Endrit Sella, and this is Capital Markets Quickie. Let's jump into what's driving the week ahead. Quick note before we dive in, today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Now, let's start with the obvious. Tech is once again taking center stage. Artificial intelligence remains the dominant theme as chip makers and software companies line up to report earnings. We've got Advanced Micro Devices, Qualcomm, and ARM Holdings all set to deliver their numbers, along with Palantir, whose stock has more than doubled this year thanks to AI demand. Investors will be paying close attention to what these companies say about AI chips, data centers, and infrastructure spending. AMD's deal last month to supply chips to Oracle is expected to come up, and Qualcomm will likely highlight its new AI processors for servers. ARM, meanwhile, has been riding a wave of investor enthusiasm ever since it went public again, so expectations are running high. And then there's Palantir. The company has become something of a poster child for the AI boom. Its government contracts, defense business, and new commercial deals have pushed its stock sharply higher. Investors will want to know if that growth momentum can continue into next year. Now, shifting gears, the pharmaceutical sector is also in the spotlight this week, but for a very different reason. Novo Nordisk, Amgen, Pfizer, and AstraZeneca are all set to report, and they're facing mounting political pressure. President Donald Trump recently criticized soaring drug prices, calling for the cost of weight loss treatments like Ozempic to fall from over $1,000 per month to roughly $150. Pharmaceutical companies have already signaled they're willing to make concessions to avoid hefty tariffs. So these earnings calls could get pretty interesting. Meanwhile, several gig economy giants are also on deck, including Uber, DoorDash, and Airbnb. Together, they'll provide a snapshot of how the consumer economy is holding up as borrowing costs remain high and wages slow. However, outside of earnings, the economic calendar this week looks, well, pretty thin, mostly because the federal government shutdown is still dragging on. The Bureau of Labor Statistics has delayed its October jobs report, marking the second straight month of postponed employment data. The same goes for reports on factory orders, the trade balance, and job openings. So, with Washington still in gridlock, investors are relying on private sector data to get a sense of what's happening in the economy. The ADP employment report due Wednesday should offer at least a partial look at hiring trends. The ISM manufacturing and services surveys are also on deck, along with the Fed's consumer credit report and the University of Michigan's sentiment survey, all of which could give markets some direction. And yes, we'll be hearing from the Fed again this week. After last week's rate cut, the second one this year, several officials are scheduled to speak, including Philadelphia's Anna Paulson, St. Louis's Alberto Musalem, and New York's John Williams. Expect them to walk a fine line between optimism about inflation cooling and caution about a softening labor market. So, to wrap it up, tech earnings will set the tone, pharma will face political heat, and the Fed will keep investors guessing, all against the backdrop of a government shutdown. It's another week where markets will have to read between the lines. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.